Hey guys, welcome to Tix Magic Scheme, where we try to turn our hindsight into your foresight. Ugo here, and today we're going to be talking about stock market investing for beginners. Now, we've broken it into 5 different parts just to help guide you through the video. So the first part is going to be how to get started. Second, picking stocks. Third, best practices. Fourth, the realities of stock trading. And fifth, what I think about the stock market right now. So, without further ado and without wasting time, straight into the video. So you clicked onto this video, how to get started in stock market investing. Now, first of all, obviously, what is the stock market? So stock market is essentially a place where you can trade securities which essentially buy shares and stocks within companies, which essentially means that you're part owner of that company. So whenever you buy a share, own a part of that company, and then you can, when the share either goes up or goes down, you either make money or lose money, and you can also gain money in another form in terms of dividends when they which is basically profit sharing. Now, obviously, to get started into the stock market, you need a stock broker, because you can't buy directly into the stock market. You have to go via a broker essentially to access that. So I personally use Trading 212. And the reasons why I use Trading 212 is because of no commissions, and I also operate via my stocks and shares ISA, which allows me to pay no tax on capital gains. Capital gains is essentially any money you accrue on top of the original share that you bought. So then you normally pay tax on that. But if you do it within a stocks and shares ISA, then you wouldn't pay tax on that. And for non-commission fees, most brokers in the past used to pay, charge a commission for you. Even for some places, the commission may be higher than the actual stock you're trying to buy. So for a lot of people, it used to stop people from investing. Now the barriers to entry is very low. So I use Trading 212. There's a link in the description. There's also other platforms, eToro. There's Hargreaves and Lansdowne. There's a lot of different ones. Most of the banks have them, but there's Halifax, Barclays. Most of them go through them, but most of them will have a commission basis in which you pay either for every trade or a monthly payment on that. So how to get started, get yourself a stockbroker, and yeah, we go straight into number 2. Now, picking stocks. So before we even talk about picking stocks, there's just 3 concepts I want you to understand what they are. Index funds. Index funds is basically a group of a bunch of stocks which you can buy for the price of one stock. So if it's the S&P 500, which represents the 500 biggest companies in America, or the FTSE 250 or the FTSE 100 that represents the 100 and 250 biggest companies in the UK stock market, if you buy one of those stocks, then you buy a little piece of all of those companies, and then you get the return of their averaged performance. SPACs. Now, SPACs is something that has, kind of blown through this year and last year, and I'm going to speak about this in conjunction with IPOs. Now, IPOs is initial public offering. This is essentially the first price that comes onto the stock market when a company goes from private to public and starts trading on the public stock market, regardless of what country it is. Now, SPACs is called our special purpose acquisition companies, which basically are companies that have already had an IPO, already gone live, and another company is trying to come onto the stock market, but they do something called a reverse merger by buying this company or being acquired by this company, by a SPAC, and then by that virtue get into the stock market. It's a good way for them to get more cash already raised, because for the fact that the SPAC is there, they're already raising money, so that company will normally use that to launch pad themselves further and accelerate their growth. Also, the actual process of doing an IPO, filing with the Securities Commission and everything, can be tedious at times, and a lot of companies don't like that. So you will see a lot of companies coming up right now in terms of either launching IPOs or SPACs to get into the market, and a lot of prominent companies have done that to get into the stock market. But now going into picking stocks. I mentioned IPO, SPACs, and index funds because, especially in the space of IPOs and SPACs, that's really hot right now. And so you could be seeing news about all of these things and automatically be running to go and pick those stocks or buy those stocks. Now, when it comes to picking stocks, I normally break it down into 2 ways. You have the qualitative way of picking stocks and the quantitative way. Now, when you're starting out, it is pretty much easier to start with the qualitative. Now, qualitative is basically invest in things you know. Invest in things you understand. Invest in things that you normally use on a day-to-day basis. So, for example, if you're a girl and you you use a lot of makeup, there's a chance that your favorite makeup brand or their parent company is on the stock market. And if you understand that industry and you know how it's going to grow, then do that. If for example, if you go on Boohoo a lot, they have stocks that you can buy with stocks in Boohoo. If you understand the e-commerce market, where there's PayPal, all these kind of things, you can invest in those. So start with what you know. Start by investing in what you know, and also in a way of qualitative picking of stocks. You can pick in terms of what areas or what industries do you think is going to grow, what areas do you think is going to like their stock market is emotional. For example, I invested in Gap because they signed they had an exclusive deal with Kanye West. So that was a qualitative way in which I picked the stocks. Now, in terms of the quantitative way, that is actually by looking at their investor presentation, their financials, has their revenue been growing over the last 5 years, EPS, earnings per share, their price to earnings ratio, all these little intricate things. But ultimately, for the purpose of this video, we're not going to go too much into the quantitative part of it. We're going to stick more to the qualitative. Because you're starting off, it's better for you to start with areas that you understand as opposed to venturing into places where you don't understand. Famously, Warren Buffett wasn't investing in any technology stocks or internet stocks or internet company stocks because he didn't understand that market. And he's third billionaire in the world. That's by the way. So in terms of starting out, what I would do, obviously none of this is financial advice. What I would do is normally start off your investing with stocks you understand, like companies you understand, industries you understand, whether it's fashion, sport, whatever. Start with that. 2, go into the index funds. So S&P 500 and FTSE 250 and 100 are good stocks to start off with, because they are basically representative of if the American stock market goes up, typically that index funds will go up, and those have outperformed most hedge fund managers and those active investors on a 10-year basis. And so if that's beating them, then it's a very easy way of passively just buying up the stocks, and that way you don't risk yourself too much. And then when you go past that, then after you've built up like a basis of your portfolio, then with index funds or stable stocks, then as you start getting more comfortable as an investor, then you start taking riskier investments and start going more into the quantitative basis as opposed to just the qualitative basis, because that way now you've come into it, and experience is honestly the best teacher. And ultimately, as you go into your investment journey, then slowly but surely you start understanding what kind of investor you want to be. Now, you can be a growth stock investor by getting into stocks early. You can be an index fund investor in terms of just index funds and then building it that way. You can be a dividend investor, investing in companies that provide a dividend, which is again a payout of profit sharing. So you can do all those things, but over time you start to understand what kind of investor you are. Now, going into the third aspect of this video, best practices. Now, in terms of best practices, there's a lot of best practices, especially when you're starting off. Now, the first thing you need to understand is that the stock market is it's just a measure of, to some extent, on an emotional level, because the stock market is emotional. For you, it will be an emotional level of recognizing what is your risk tolerance and what can you actually hack as an investor. So, best practices, first of all, if you're starting off investing, don't invest more than you're willing to lose. Just don't. Like, yes, there's always somebody who says that there's always someone who put their whole house money in the stock market and doubled it, but there's more. For every one story of that, there's 10 stories of people who lost all their money. So, don't invest more than you are willing to lose. 2, invest invest consistently. And that is basically by whether you regular contributions, whether it's every week, every month, which is essentially called dollar cost averaging, which is basically like if you buy at the low, if I buy £100 at the low, buy £100 in the high, £100 in the middle, it will average out. But essentially I'm investing consistently. And in terms of, on top of that, another best practice is understanding that don't time the market. it's about time in the market. That's why dollar cost averaging works out to beat most people who are, unless you go big at the beginning, then especially for most people when they're starting off investing, and it's one of the reasons why they weren't investing before, is because they didn't have enough money to just, in their mind, they didn't have enough money to invest. So dollar cost averaging, just gradually investing and just having time in the market. And this goes into my last point about best practices is patience. When you invest, just take your time, relax, and go for it. Like, just let it settle, let it go, and just let it. Don't be checking it every day. Don't be checking it every day. Be patient, and ultimately, another good practice about using the stock Another good practice is setting reminders. So instead of you checking your portfolio every day on individual stocks that you may be concerned about, especially if they're volatile, set reminders, set price alerts. So if it's at £20 now, set price alert for 16, set a price alert for 24, so you know it's whether it's rising or you know it's going down. And also, when you're setting the price reminder, always set the price reminder at your margin of if you put it, let's say you bought a stock at £20, for example, and it's risen to £40, let's say you're like, okay, cool, instead of you cashing out now, you want to see how long it goes to long term, but you don't want it to go below 30 because you want to take that £10 gain that you've made. Set the price at 30, and then that way you get an alert and you can just sell it off immediately. Now, going into the fourth part. Now, in terms of the reality of stock market trading, it's an interesting thing to get into. It's something that everyone should be getting into. There isn't really, at this point in time now, in this time of our lives now, with no commission, with fractional shares, which is basically a little, instead of you owning one share, if it's £100, you can own 1/10 of that, which is £10, and that may be easier for you to get in, and you can start investing with at least £1. So this, with when you're going into the stock market, there's a difference between investing and speculating. Now, investing is basically when you've looked at a company, whether it's qualitatively or quantitatively, and then you've made it in a wholeheartedly saying, okay, I think it's a good company to invest in, and then you've invested in it and you've let your money grow. Now, speculating is basically you're seeing this company and you think it's going to be hot and you think it's going to fly off, and then you put the money there and then you see it fly, go up and down. Most times what goes up very quickly will come down as quickly as possible. So try as much as possible to be moving towards investing rather than speculating. And in terms of my own journey of going into the stock market, I started investing over a year now, and I started investing with just putting £20 per month. Actually, tell a lie, I actually started because back in the day I used to buy lottery tickets. So what I used to do is that for every time I bought a lottery ticket, I would basically times that amount that I spent on that by 5 and invest it in stocks. And then I consistently started investing £20 a month because I stopped buying lottery tickets. And then, because then again, you want to win some money. And then I started investing £20 a month, £20 a month, and I started getting some gains. I was going up and down, and then I started investing £100 a month, and then once I started getting more comfortable with what I was doing, I took some of my savings, of which I had, which I was using for a different investment, but in the meantime, I put that into stocks, and so far, it's actually gone very well for me. A lot of my stocks have gone, over 100. Some of them are 300% return. Some of them are 50. Some of them are 12. And ultimately, some of them are good. Most I've lost. Ultimately, you lose money when you sell. So the only stock that I really sold at a loss at the time was Tesla. I know. I don't like Tesla personally. They lost me my £70, but I've earned more than I've lost, to be honest. And I've invested in something that I'm going to consistently continue to do. It's a good practice to be doing, especially when you want to build wealth. Thing to note, which I always tell people about, one, average return on the stock market, at least the US stock market, is about 10% per year. 7% is pretty good. So when you're actually investing, even though I've said I've got some hundreds and stuff like that, I have some negatives. Overall, my portfolio right now is probably about somewhere between 20%, 30%. Now, it's because of how early on I've been investing for over a year now, and over time, with everything that's happened, it's cumulated into me gaining more. But you have to understand that whenever you invest in a stock and it goes well, so for example I might put £50 in a stock, it doubles, goes to 100, and in my head I'm like, oh wow, that stock was so good, I should have put more. But again, at the same time, that stock could have easily gone down. So whenever it goes well, you always be like, oh, I should have put more. Whenever it goes wrong, you always be like, I should have put less. So ultimately, never put more than you're willing to lose, because once you've lost it, or you stay in there longer hoping to get it back, and you don't know when to cut off. Now, in terms of my last point on that is about, yes, when you are investing in stocks, some of the hardest things is actually knowing when to sell, because the truth of the matter is you don't lose or make money until you sell. Your portfolio may be up, but your portfolio can be down. You haven't actually made anything until you sell. So you have to kind of set the margin for yourself. So how I typically do it sometimes with some of my stocks is that if I put £50, if it doubles to 100, I take the £50 and then leave whatever my gain there to be growing, and that way I would take out my original investment. Going into 2021, I'm going to be doing more diversification in terms of my investment, but I'm broad out of the stock market, as I've been trying to do this year, into other aspects of property and all that, but that's something for another video. Now, going into my last point about this video, what I think about the stock market right now, and is it a good time to invest? Now, the stock market is going mad. It's going mad, particularly with all the IPOs coming on, particularly with all the SPACs. You hear one new stock, it starts flying. Airbnb went last week, and they they put it was supposed to be like £68 or $68, sorry, and they're coming up with like 170, 180, whatever. Like, these men are moving mad, and so there's a lot of stocks out here that are overpriced, and not worth the money, and will eventually go down in a market correction. So it's very important that you understand that you should research what you're going to invest in, and not just follow what is going hot right now. The stock market is somewhat inflated, but the truth of the matter is, even though the stock market has reached, I think, all-time highs 3 times this year, it's going to reach an all-time high again. So in terms of investing, now is always the best time to invest, and it's all about you picking the right stock. But ultimately, if you're starting off, it's probably simpler, in my opinion, for you to just start with index fund investing and then build your portfolio from there, because provided you know that the economy is going to do well in the long term, then your stock will do well in the long term. So that's giving you some basis. So don't try to time the market. It's all about time in the market. So this has all been about investing in stocks. If you have any questions or anything I didn't cover, put it down in the comments below. Let me know if you enjoyed the video or not, or if any of this information was valuable to you. But for me, I'm going to continue, and I started with £20. Now my portfolio is a couple thousand, and I think if we reach about 250 in terms of our subscribers, maybe I'll reveal some of my portfolio. But until that time, have a blessed day. We'll come to the end of the year. Have a blessed end of the year, and I hope God blesses you, your family, and I hope that as you're going on your investment journey, it's a success for you and your family. Take care on your way to build wealth. Don't forget about your health. There's a lot happening outside today, isn't it?